What's up, everybody? Thanks for tuning into this video. I wanted to make a trade recap going over some market context and explaining my edge, which in my opinion is something that a lot of traders do lack. Context gives us direction, and this enables us to see the full picture and understand the story that the market is basically telling us. And in this video, I'm also going to go over some trades that we took in the Discord chat room on SPY, Zoom, Tesla, Roku, and Boeing, along with my thought process behind each one and some very key analysis where I'm going to drop some really true gems. But before we do begin, all I could ask is if you learn anything from this video, you take anything out of it, if you could just smash that like button for me. And also, if you could follow me on Instagram, this is a very good resource. I post daily trading recaps and very good trading tips and tricks. The link to this will be in the description below. So without wasting any more time, let's get right into some market context and break down some trades. First thing I want to go over is the S&P 500 on yesterday. It was Monday, start of a new week. The market was gapping up. We had positive COVID vaccine news, and I was watching CNBC in the morning, and everybody seemed to be super, super bullish. So if you do not understand the concept of supply and demand, when everybody is bullish on something, a big red flag goes off in my head. Same thing when everybody's bearish. If you do not understand supply and demand imbalances, when everybody is leaning more towards one side of the market, that's basically a recipe for reversal. So I try to figure out where everybody's super long on something in a supply zone, because that will give me my edge to take the market short when everybody's buying. And if we're coming down into a demand zone when everybody's selling, my edge is buying from when these traders are selling, just based off of order imbalances. So yesterday we opened up in daily supply. I was not looking to take this thing long. I told everybody in the chat room the only interest I would have is if we could stay above VWAP and if we could hold value and base above the 3680 supply zone. We were forming a rising wedge inside of supply. As soon as the market started coming down, sellers were very aggressive, and we had strong buying before the open. And you want to see these buyers defend the market once price comes down into that area again. And basically, if it goes lower, these buyers are going to be underwater. Unfortunately, we had very aggressive selling that overweighed the passive buying, so the market continued to go down. Those buyers could not defend it, which told me buyers are very weak and sellers are in control. So the goal here now is to focus on the next demand zone. And I believe we had a demand in the from this gap right here, which formed demand. The market came down and we had demand in the overnight session in this area. So at some points, the market looked bound to bounce, but there was no strong aggressive buying in the market, and we came down, broke below demand. The next demand we tested, we broke below it. So right then and there, every demand zone basically got eaten up by aggressive selling. We came down into this very strong buy imbalance at 3637, where we started forming some type of support where buyers showed interest, and we were holding this level throughout the overnight session, gapping up overnight. And the pre-market plan this morning said we had a 45-minute supply zone at the 3670, and the major area of interest for me was the 3680 area, which was supply that was created from the massive imbalance that was formed yesterday. So the market opened up. I took this trade short, but one thing I want to notice here is when the market is making lower lows and lower highs and we reject supply, that is a good indication for you to short basically any move up, any rallies, and put your stop loss above the market until it makes a higher high. So we were trending down, lower lows, lower highs were obviously present. We did reject supply. I did take this trade short. And then one thing I want to note here is that once we did switch trends and we started moving back up, it was pretty evident because we came up and we broke above, we made a higher high. Not only did we do that, but we also based and held above VWAP before continuing higher. So right then and there, the trend to me looks like it's about to reverse. Anything could happen in this market, but those are pretty much early telltale signs, which give you a little context and a little clues for potential scenarios, later in the afternoon. But a good go ahead is to short any pop, any rallies into supply, any rallies as long as we do not make any higher highs and switch trends. So then in the intraday commentary around 12 o'clock, 1 o'clock my time, we were testing the 45-minute supply zone again. And what I was watching to see is if sellers were present. Obviously the first time sellers were very present. Second time we tested it, if we formed a double top, it would have gave us low risk trade to take to the short side. But we came above it. And one thing I wanted to notice here was that we did have strong buying down here. We did form new demand and the market was coming up. And if the trend was going to continue, we would have to get above the supply zone and we could look to take this long for a quick 10 points, full dollar on SPY, as long as we held above the 1 hour, or not the 1 hour, the supply imbalance for a very simple and easy trade, speculating that the market is going to move up and test the next supply zone. So this was a very nice, easy, long trade. It happened pretty fast. You just have to think a little differently. Nothing stopping us from trading at supply. And then throughout the whole late afternoon, going into the close, we were just sideways trading at this supply zone. So let me know what you guys think. Comment down below. Do you think the market top is in? Do you think we continue to rally? Let me know the scenarios you have in your head. I'm curious to see what everybody's bias is. We have Nasdaq. We trade the QQQ options, or you could trade the Nasdaq future contracts themselves. Same thing like yesterday, we were rallying into a major supply zone starting at 12574 and then 1284. We opened up and immediately we're starting to, stall out. The context is basically seen not after the fact, but during the market and as it's trading. So it's very hard for someone to understand exactly what I'm talking about if you're not watching the candles develop and actually watch price. But we had a very hard time. We tagged the supply zone pretty perfectly. We had a pretty hard time moving up. We were trading kind of choppy on the Nasdaq in the first hour of the market open, but we were making lower highs and the bottom was kind of flat. We created a nice support zone in this area right here. We finally broke below. And one thing I want to mention is if you break below a support level, you break below a wedge, a trend line, that area should act as some type of resistance if we're talking about the downside. And we broke below, we came below resistance, rejected supply pretty perfectly. So the context is sellers are in control. We hit supply, we're selling off. Look for anything that we could get a move up to short into, or anything coming down confirming sellers are still showing aggression and buyers are not passively looking to enter the market. So we did come down, and again, this did not bounce off of demand. Instead, we formed new demand in this area down here. And then we did rally and tested the supply zone again. Did nothing at the supply zone. You have to look for confirmation in these zones. If there's no confirmation, you do not take the trade to the short side. If we're talking about supply, came up and closed pretty flat inside of this sell imbalance. Facebook, I want to break this down as best as I can. Yesterday, we bounced off of this 2 hour and 1 hour demand zone. Today, we were opening up right near the level, and I wanted this area to hold. Now, Facebook had a lot of demand zones that should have supported us, and you're going to see exactly what happens. But a valid confirmation to take this trade to the long side is right here. We double bottom at demand. This demand zone yesterday proved to have provided a positive reaction where we did bounce. We double bottomed at this demand and we did come up. So with any strategy, you're going to have losing trades. You're not going to win 100% of the time, but that does not matter. It's irrelevant as long as your risk is low. These supply and demand imbalances serve as low risk areas where the market has a high probability of turning because of the complete auction process behind the complete mechanics of these imbalances. So we double bottom, buyers are present at this demand zone. I took this trade long at the 272.75 area, risking the low. So I was risking about 70 or so cents, and this market did reverse, and I did stop out of this trade. So now we're below this demand zone. Buyers at one point seemed like they were interested. Now they seem to have no interest. We're coming down and we come into this daily demand zone. So now I'm watching it out to the long side, but I get no indication to take the trade long. Sellers are in control. We have heavy selling pressure coming into the market, and we continue to come down lower and lower. So now we tag this 2 hour demand zone. Again, it looks like we are starting to bounce. I avoided this. I was not taking this trade. I was preoccupied with, I think it was SPY at this point. But we came into this 2 hour demand zone. Again, somewhat of a double bottom. We start stalling out. Buyers are present down here with the volume. Valid entry to take this trade short. Now, this is where it depends on your risk tolerance, depends on your entry, your exit signals. Every trader is different. If your stop is the low, eventually you would have got stopped out. But again, in this case, you're risking about 60, 70 cents. So the risk is about the same. We break the low. You would have got stopped out if it was below low a day. But we're at this 2-hour demand zone. Buyers are present. We formed somewhat of a inverse head and shoulder where we have a left shoulder, a head, and then a right shoulder. And then from this area, we started bouncing. So a lot of traders, they take losing trades, they take a loss, and mentally it scares them. Mentally, they get afraid to take another trade. They lose their confidence. I'm sure a lot of you listening to this can kind of agree with it. You take a losing trade, you get down on yourself, you feel like you did something wrong. But usually after losing trades are the best opportunities to enter the market where we can reverse potentially again and have very good trades. So we did hit this demand. And even though, let's say you were in both losing trades, you took 2 losing trades on Facebook long, we're in demand. Those 2 70-cent losers would have been completely wiped out if you caught this rally from this next 2-hour demand zone where we bounced about 8 or so points from this level. So even though you took 2 losing trades about 70 cents, you had the potential to make 8+ points from this demand zone. Risk to reward, you would have been profitable on this, So there's so many different ways to look at trading and so many different ways it can mentally mess you up. You have to be strong, you have to be confident, and you always have to be looking for opportunities because at the worst times, the times you think that are the worst times to enter, those could be the best opportunities right there. Tesla is the next one. We were trading in pre-market at a 3-hour supply zone at 646. I said I'm going to be a bear as long as we are below the high from December 9th at the 654 area. I was a bear as long as we're below. We did open up at supply. We did reject, but I don't trade the first 5 minutes. There's zero edge in that. As you all know, the first 5 minutes always has the most volume in the market. It always is the most indecisiveness. We could go up, we could go down. So I stay away from that. It's just also the premiums are jacked up. So it's kind of hard to get a good trade. But you always wait for retest, double top, double bottoms, whatever is going to tell you that sellers are in control. We came up and we failed to get above the high. We failed to get above the supply zone and trade inside. So literally anywhere in this area, this is what the whole thing with trading is every trade is different. Every trader is different. Every trader is going to have different entry points, different risk tolerance, different risk capability. So your goal as trading, I tell the members this all the time, is just to get in as close as possible to where you're going to get out if you're wrong, because that means your risk is low and you could afford taking losing trades more often than not. So anywhere we're rejecting in this area, at this point, you could take the trade short, you could long puts, putting your stop above the high, you're risking about $1, $1.50, maybe $2 at most if you put your stop loss above the high. And Tesla had a very nice sell-off. As soon as we broke down this trend, this uptrend line, as soon as we broke below this, we started selling off, formed somewhat of a wedge, broke below it, and the market started selling off pretty aggressively and did nothing. If a stock is not moving in a supply or demand zone, I have no edge in that. I stay away. I don't care if the market is ripping up, ripping down. If my edge is not present, I am not trading at all. Traders feel the itch. They see the market moving. They get FOMO. They feel like they have to have a piece of the action, and they'll take unnecessary losses because they don't go in with a game plan. They don't have an edge, and they'll blow up their accounts because they're basically trading in the white space. They're trading in areas where they should not be trading. Roku from the pre-market plan as well. 3-hour supply at the 32946 area. We opened up, we rejected the first time. Second time, we broke above the high. We failed to stay above this area. So right then and there, number one, we're in supply. Number two, buyers are weak, sellers are strong because we could not, hold value and stay above that high. You could take this trade short anywhere in that area. Let's go ahead. And also, anywhere in this area, once we're consolidating, choppy, we failed to get above 329 once, twice, 3 times, and then after like 12:30 or so, we started selling off. So your goal is to get short as close as possible to the stop loss area. Sold off, and look where we started stalling at. We could not move lower, right at this 3-hour demand zone. One thing I want to mention is that every time I post these videos and these recaps, everyone asks to join the chat room. The chat room is only available to InvestorTrade course members. It's a private community. Once you purchase the course, you get access to the Discord at no extra charge. Last thing I want to go over before wrapping this video up is Zoom. We were making higher highs, making higher lows. As soon as this trend broke, we rejected supply. We sold off pretty perfectly. There's opportunities all day long. The goal as traders is just to find them. And that's why I built the community. So we have like-minded traders all trying to help each other out, spreading ideas. I post commentary throughout the day of what I'm watching, these pre-market plans. So I hope you all understood my thought process a little more. I hope it wasn't so much of me just rambling. I like to do that, but I try to get my point across in the most efficient way as possible. So if you did learn something, drop a like, subscribe to my channel, and also follow me on Instagram. I'll talk to you all at the next video.